This is Julian Callow. He's Chief European Economist at Barclays Capital and a member of the ECB Shadow Council. All right. Hello, Julian. Thanks very much for joining us. So how concerned should we be about these strikes across Europe? Are they going to actually prevent governments or hinder them from implementing these austerity measures, or is this just something that we should expect to see?
Oh, I think we have to expect some kind of political reaction, and I think the political reaction is going to get stronger, really. We're only in the very, very early days of seeing cuts coming through at the fiscal level. Many of the very tough decisions have yet to be made in most of the countries, perhaps Greece accepted here. And therefore, there is inevitably going to be political backlashes. And I think, in a way, markets have been tending to forget a little bit that it's all very well for governments to announce the fiscal consolidation overall measures, but when it comes to the nitty-gritty, actually implementing the precise deficit cuts, that is when things get a lot tougher. And the point is, this is going to be a multi-year process. I mean, when you're looking at Portugal with its budget deficit coming down from over 9% of GDP, or Ireland with its underlying deficit coming down from 11% of GDP, or the UK, indeed, from 11% of GDP, it's going to be a very long road. It's going to be a very tough road. It is going to be very challenging, and it's inevitable that there's going to be political backlash. And as well, we are seeing this tendency for fragmentation across Europe in political terms. For example, Belgium and the Netherlands, they haven't been able to form governments 3 months after elections. And these are quite small economies and countries that usually get together around a table and fix things. But they haven't been able to do that. This doesn't really augur very well, I think, in terms of future political stresses within Europe.
Now, it's funny, Julian, because you have workers in Germany actually striking for higher pay. It kind of highlights the divergence that we see in European economies. They've got different problems, and German workers, really, they've got a point, and then that Germany is doing okay.
Well, that's right. In fact, we just late yesterday we published a report looking at divergences across Europe in relation to divergences across the US states, and it's very clear that the divergences across Europe are still much more significant, and that does make, of course, the challenge for the ECB much harder here. Now, in the case of Germany, you are starting to see now some improvement in domestic demand, and I think you will start to see German inflation move a little bit higher. The only thing is that the really big German wage settlements for IG Metall engineering workers and for the public sector are not due to come up again until the spring of 2012. So it's going to take time for that inflation to start to emerge in Germany. But we are seeing some rebalancing in the system. We are seeing the deflation coming through in Ireland, very pronounced disinflation coming through in Spain. But it is very challenging conditions. The euro area is not simply as integrated as the United States for kind of obvious reasons.
But, Julian, we already know that. We know that Europe is diverging. The economies are diverging from one another. The question is this going to continue, or are they going to come back together at some point?
I think excellent question, and I think they will. I think we need to have policies that really address deregulation, particularly in labour markets. To help that, we need to have particular focus on those countries which are divergent, which are really Greece and Ireland, and to a degree Spain as well. We need, and Finland, by the way. We need to have particular consciousness on the part of policymakers. Maybe some special measures need to be taken, as indeed the ECB is with respect to some of those countries. It's going to be very difficult, but it is one market. That is one thing. It is one monetary policy here. I think it is going to hang together, but it does require a lot of attention and tailored policies, particularly for these problem areas which are outside the core.
Not an easy feat. Julian Callow, Barclays Capital, thanks so much for joining us.